So here's where I want to start. I want to bring up this chart that's from Fred, and we're going to kind of set a tone. This week's been quite a revealing week for me, and I've been around some of my blockchain Bitcoin friends, and so I think having that exposure this week has reminded me about some principles that got me into blockchain years ago, and I'm just seeing some pretty strong reminders of that information today. And I just wanted to give you guys a download why I'm an advocate of blockchain tech, why I'm an advocate of Bitcoin, and what's going on today that has me kind of hyper focused, you could say, on some of this data. So let me bring up this chart first for you guys. And what we've got here is what's called real median household income. So this is like between, a couple, a spouse, or, if it's a, single income household, it doesn't matter. This is household income, not individual income. And as you can see, going all the way back to the 80s, like this is somewhat steadily been on the rise. And you can see every time there's been a dip, this is really important to notice. Every time there's been an initial dip, there's typically a recession, and then a carving out in income, and then an increase in income. And so you can see in the 90s that we had a drop in income. Following that, we had a recession, and then income dipped a little bit lower. And then once we got QE in, it skyrocketed. And then we had a great end of the 90s, into the 2000s, the dot-com boom, and then the dot-com bust. And income dropped per household. You can see we went into a recession. And by the way, right now, we're still technically not in a recession, which is mind-blowing, but it's just definitions. It's just semantics, guys. It doesn't mean that we're not in a heavy time period financially for America. It just means that it doesn't meet the qualifications and the numbers. And so really irrelevant, but it kind of helps to see like the impact. 2000 dot-com bust, we had that recession. You can see that right here, right around 2001. Incomes dropped. We're focusing heavily on income right now. Income drops a little bit more into 2004, and then we have a spike. Then what happens? We have the 2008 crash. Incomes drop even lower all the way into 2012. This is important to note. The 90s recession, we climbed out of afterwards. The 2000 recession, we did not. Incomes really never hit back into those all-time highs back into the 2000s, and then slumped even lower after the real estate crash. And then in 2012, income started coming up pretty heavily. And you can see all the way up into pre-COVID conditions, incomes started spiking. COVID hit, incomes dropped. We had a little micro recession because of the pandemic, the shutdowns. And then that ended, we had all that QE come in, and then things started to subside. And now we're left to today. We're not at peak incomes per household, although I could argue unemployment's at an all-time low. So I kind of have I have a hard time with this data because we've got the lowest unemployment. In fact, anyone I've talked to, specifically here in Utah, anyone I've talked to is upgrading their jobs. Like everyone's getting paid more. Everyone, if they're not getting paid more, they go get a job somewhere else and they get paid more. Like it's very common over the last 2 years through the pandemic that this was happening. Now, not so much now. Like I would say now it's a lot harder. There's more layoffs happening right now than we've had in the last 3 years. Unemployment is starting to tick up. And so people are a little more shy around trying to jump jobs to get a pay increase. I totally get that. However, it is a little confusing, but the numbers are starting to balance out. So what does this mean? Like, why bring this up, Matt? What's going on with income that has you so concerned? Well, inflation is like this. It's like this virus that has no cure. It's something that spreads and it grows in size. It's not something that historically in any form of fiat currency in any government has ever worked, meaning like it usually ends. And we're actually I don't know how many of you guys know this, but we're actually the longest standing country for a currency, one, and two, that's dominated. So we're in this anomaly and we don't quite know what the pattern is going to be. But what we can see is that dollar denomination is falling. Like you could say we finally have hit a peak and we're coming off a trough. Does that mean that things are going to get better or that the dollar couldn't have a comeback? I guess it's possible. But the problem is, we're going to talk about this, our system, our political system is geared for that not to be that way. And I'm going to show you some evidence of that here in just a minute. But before I do, I want to show you this picture just to give you a sense, because we relate to the Great Depression like it was something that was like the worst time in history, right? The hardest, most difficult time in all of history, the Great Depression, right? We see these pictures of lines, people looking for work in New York, and the average income during the 30s, during this time, was around 4,800, or we could even call it 5,000, but it was about $4,887. I think it's actually important to get down to the dollar because a dollar was worth so much more money in the 30s, right? 1930s, by the way. This is almost 100 years ago. And so we look back at 100 years, we try to learn from history, and we go, oh, that was such a hard time. But I want to do something with you that's probably going to blow your mind. And if it's probably going to have you feel a little justified around like your feeling. If you feel like money's tight, things are feeling like you're strapped financially, and you're like, gosh, things feel really hard. I wonder what it was like in the Great Depression. So just hold on. What I'm about to show you is going to be really shocking. And I hope it's shocking. I hope you share this with everyone, because something is going to have to change. We're going to have to, if you want the dollar to stay the denominating factor that you use and your children use, we have to change how we're doing politics. We have to change how we're spending, because it's just frankly not going to work. It's just not. And I want to show you this. This is how do I want to do this? Let me go to a calculator. Let me see if I can pull up an interest calculator. I'm going to pull up an inflation calculator really quick. And I want to show you guys, I'm just going to bring this up. Let me pull this chart up really quick. So here's an inflation calculator. And any of you guys can do this math. This is not like me obfuscating some information to try to prove a point that's not really real. No, this is real. Like anyone can go to an inflation calculator, go back to the 1930s when we were going through the Great Depression, and let's put in the average income of a person during the Depression, not after, not before, during. So like the worst time, what were people making on average in the US during the Great Depression? And if we were to fast forward to today based on all the inflation, and by the way, this is targeted inflation. This is like actual inflation that we use the numbers for, not what I call actual inflation, because once we got off the gold standard, the way inflation started going up was like this crazy curve, because we started taking a bunch of data points out, like household, like what a house costs. We took it completely out of the equation for some reason. And if you guys have seen house prices over the last, even decade, it's been like a 2x, where inflation has not shown that. It's been like 3 to 4% a year. So anyways, let's put in the amount. It was 487, I think was the amount. Let me just double check that. Yes. So $4,877 was the amount. So this is basically saying if in 1930, end of the year, I purchased an item, or let's just say my income was 4,870 or 887. Then in 2023, at the same item or the same pay would be, and let's see what it is. So the average income should be 89. $89,000. Now, for those of you who are making six figures, or those of you between you and your spouse, maybe you're bringing in more than that, you might be going, wow, well, I guess things are just as bad as the Great Depression. We're making about, based on inflation, like actual rated inflation, not what I would call actual inflation. We can get to that in another minute. Maybe I'll even show you some resources on actual inflation. But just off of the inflation that we track, that's been tracked throughout history using the data points that we're using, not the ones that actually I think we should be using, this would be the amount of income you would have to make today to be making as much as the average person during the Great Depression. Scary, right? Well, it gets a little worse than that. It's not, this is not good data, because average income in the US today, do you guys know what it's at? It's actually at 67,000 average in the US. So we've gone not only like close to equal, but we've gone negative. You could even say, and some are calling this the silent, not recession. Some people are calling the time period we're in a silent depression. And why is it a silent depression? Because if the average income today is 67,000, and this chart I just showed you said, if we were to be making as much as we were making during the Great Depression, we should be making 89,000. We are already behind the ball. We are worse off as average income than we were during the Great Depression. And if you don't like this news, and if, hopefully a lot of you are like, oh, yeah, this feels validating. Like, this makes a ton of sense. Like, why are we not talking about average incomes anymore and the disparity between the upper echelons and the lower income? It's because, frankly, we don't like looking at the truth. We don't like looking at this data. And I'm going to make some arguments around why our political system is broken, our spending has to change, and why things like Bitcoin or alternative currencies that do not have the ability to print more have an appeal, and likely long-term will gain value just out of the mere fact that they don't inflate. Just out of the mere fact that like over the pandemic, we printed trillions of dollars, and you just can't do that with something like Bitcoin. And so I'm going to bring up some charts at the end of this. We're going to do a full technical analysis, is the thing I do best. And you guys will get an idea like where I think technical levels are with some of these coins. We'll probably focus mostly on Bitcoin and some of the news that's going to be coming out, and maybe some way that you guys can start scaling into Bitcoin to have a piece of this thing that is probably going to be the future of how we do exchange in the future. And I'm not saying it will be Bitcoin that we're going to be transacting on, but as far as like how gold is a standard for our dollar, it will be a form of holding digital assets in a large form. It will be kind of the gold standard of the crypto industry if and when that happens. And so this industry's lost a lot of hype. As you guys know, we went through the hype cycle, over 3 trillion in market cap. We're down to like 1.7 now, which is half the size of Apple, to give you an idea how small the industry is. But unless it gets completely made illegal, which at this point it can't, the SEC has already said Bitcoin's not a security. They've already kind of given it the stamp of approval, even with all the headwind that the SEC has been putting on other crypto companies. We have this thing called an ETF that's coming out that I'll talk about, and how that additional market cap and exposure to the markets will likely create a run-up in the price of Bitcoin. And so we'll explain that. But before we do, I want to finish some of my thought here. So we talked about this depression chart. I want to show you this also, because this chart's quite revealing. And I think Americans are feeling this more now than they ever have. And it's not like this hasn't been going on for years. But I think because of me and because of the internet and social media, we are seeing the ability to get data in a way we've never experienced before. Meaning, this stuff in politics, the stuff that's going on, with the elites and like the strings getting pulled, all of that's been happening for centuries, really. I think it's just becoming more aware. I think the public is waking up and we're just becoming more aware of this. Like, oh my gosh, this is happening. Oh my gosh, like this isn't conspiracy. Like, and the people who are calling it conspiracy are among the top 5 percentile. So what this chart is this is real average household income by quintile and the top 5% all the way through 2020. And so if you look at this, the bottom quintile is the green line. Then you got the fourth, the middle, second, and top. And so basically this breaks out the average, your average middle quintile is going to be right here. It's that 67 that we talked about. This is the average income. This is like where most of Americans lie. And you can see that the average American's wealth or income levels really didn't change. In fact, going clear back into the 60s hasn't gone up much. I mean, the curve is there, but it hasn't gone up much over the last, this chart goes all the way back to the 60s. So, we're talking like over 50, 60 years, just under 60 years on this chart. So not a lot of improvement, but once you start getting out into these higher quintiles, you can see that the income went up quite a bit. And over the last 10 years from COVID went up a ton. So you can see the spike pre-COVID, the top 5%, the disparity. Look at the gap from the 60s, like how close things were to today and how big this gap is getting between the top earners in this country and your average. The gap is just insane. And I would say that most people since the 90s, and you can actually see it, you can actually mark it, went from 250 to 450, like their incomes doubled, while the rest of America stayed, like their incomes went up maybe, I don't even know how you'd measure this percentage, but it looks like less than 10%. So you've got a less than 10% increase, or let's call it, we'll be fair, we'll call it even 20%. And we've got almost a 200% on the top quintile. So what's creating this problem, and why are we feeding it? And what's amazing about this country, supposedly, is we're a democracy, right? We have the right to vote, we have the right to pick our candidates. But the problem is the candidates that are getting put up, and by the way, I'm not happy about this next presidential election. I'm not, and being completely bipartisan. And I would vote either way. Like, a lot of you are gonna, you may cancel me on this channel for even saying this, but I am not sworn in by any party. Meaning, I'm not going to toe the line for the Republican Party or the Democratic Party for the rest of my life. That's just negligent. But if a candidate on one side or the other of the aisle is going to do things that make this country actually better, they're going to get my vote. And frankly speaking, the two candidates that seem to be rising to the surface right now, it's like this is the best we can do. But the reality is the people funding these candidates are in the top 5%. And frankly, we have a vote, but what we don't realize is we're being filled with all this propaganda to put an elected official in that frankly serves the top 5%. It doesn't serve the middle quintile. It doesn't serve the average American. And we've got to get off of this bandwagon. We've got to start talking to our friends and demanding that we become fiscally responsible as a country. Because when you think that money goes out during like the pandemic, we get these handouts, or this thing I'm going to talk about really soon about student loan forgiveness. We think like, oh, these are great. Finally, the government's going to do this thing and it's going to help the middle class. No, it's not. Where do you think that money comes from? It doesn't come from the top 5%. When we do student loan forgiveness, that money comes from the middle class. That's where the money comes from. It robs your 401ks. It robs your Social Security. It diminishes the largest hidden tax that we have in this country is inflation. And you can see the people it hurts the least are the people that know how to manage money. It's the top 5%. But the average American who's out working a job, busting their A every day, 40 hours a week doing their stuff, they're not financially savvy. They're not making these types of moves. And so the issue with this group is when inflation happens, they don't know and have the tools on how to combat inflation. And so it's this massively hidden tax. So we just print the money to, forgive student loans, pay for Social Security that's going broke. We do all this stuff, fine, but the money is being taken from the middle class. That's just what's going on because they don't know how to combat inflation. Just like we talked about from the Great Depression, we're in worst financially, average income is worse today than it was during the Great Depression. Why? Because of inflation. It's really, I would say that is the biggest takeaway. And these guys, the top 5%ers, it would be really interesting to take this curve and run it on inflation and see are they even, how much over keeping up with inflation are they actually growing their income? Because you might be surprised. You might be shocked by oh my gosh, they're just barely keeping up with inflation. These guys just know how to keep up with it while the rest of us are just getting taxed. And so we've got to stop this spending issue in this country. And you're going to hear a lot more about this on this podcast, because if we don't change the situation, it's going to bankrupt the country, which means you. And we're already in a situation that's worse than the Great Depression in terms of income. And so if you're feeling like it's a lot of work to keep up with your bills, and by the way, I can show you chart after chart, household debt is at an all-time high right now, all-time historical high. So not only are we making less, but we have the most debt that we've ever had, ever. And then we create these policies and we have all this pushing Biden needs to do more student loan forgiveness. My payments come due in September. And it's true. September 1st, interest rate on student debt hits again. October, first payments are due. So Biden came up with this clever strategy to make it look like he was doing something because he radically failed on his forgiveness program that he put out and had millions of people spend hours applying for and getting approved even. People thought that this was going away. Maybe they bought a new car because of it, or they had this extra income and so they're going to use it for something. No, it got completely wiped off because he didn't have the authority. It'd be like a firefighter telling you didn't have to. In fact, yesterday I got a parking ticket. I know. I paid for it. I paid for 2 hours. I went an hour, or I went a half hour over, and the parking meter guy must have just been sitting there. So anyways, I have this $30 ticket. But imagine a firefighter came to me and he was like, hey, you know what? I work for the state. You don't have to pay that. Well, that's what Biden's trying to do with student loans. He frankly does not have the authority to do it. He does not have the authority to forgive it. That's why it didn't happen last time. I know a lot of students got really excited about it and then started pointing the fingers. Why am I not getting this? You're not getting it because, frankly, Biden lied to you. And he did something that he knew he couldn't, but he did it to try to appease voters. And he's doing it again right now because he knows that those interest rates are going to have to start getting paid next month. He knows the loan payments are going to have to get paid. And he's getting a lot of flack for really doing something he knew he wasn't allowed to do in the first place. But as much as, I think the student program debt situation is a complete mess. Again, if we do student forgiveness, who's paying for it? It's going to be the people applying for it. It's going to be a hidden tax that they have to pay for the rest of their lives. And we just we get like this little relief package now, and then this huge amount, we call them clawback incentives. You get the incentive now, but then it claws back for 10 years. And that's the problem with student loan forgiveness. That's the problem with these crazy mortgages, stimulus checks, even some of these handouts that have been handed out, like these. Anytime you get something up front from a government, even a company, there's typically this clawback thing where it's like, oh, I'm going to work really hard to try to keep this thing that I have. But then over time is when I pay it off. And so you don't really see the pain and suffering. But when you look at these charts from where we were 100 years ago, it's like, we've got to stop this behavior. We have to stop the behavior of taking the pleasure pill today and having the suffering for the rest of our life. We've got to get rid of this instant gratification problem that we have in this country. And frankly, it's running rampant. Like I don't know if there's a cure. And because of that, I'm going to make a huge push right now into this like alternative form of currency that frankly, I don't see this getting fixed. I don't see human behavior getting fixed. I don't see our political process getting fixed. I think we're going to keep spending. We're going to keep raising the debt limits in this country. Politicians are incentivized to give out free handouts, especially to their winners, right? The people that help get them elected, all these like executive orders that we did. And both guys, by the way, it's not Trump, it's not Biden, it's both sides of the aisle since like the last 60 years have increased the deficit. Both. We have not had a single president who's ever dropped how much we're spending as a government. And the one thing I've learned about government, and I'm heavily involved in politics now, especially here in Utah, is that once the government gets something, it never gives it back. And that's monetarily speaking, and that's also your freedoms, your personal freedoms. I've never seen them give it back. Like when we had the Patriot Act, we never saw the Patriot Act redacted after 9/11. They are now watching us. The NSA building that's right here in Utah is watching our phones. They're watching our search history. They're collecting data on us every day. And all of that is for our safety, right? We gave that up during the Patriot Act, but in exchange for a lack of freedom and a lack of personal privacy. So this is the role of government. This, we can just say, and this is hard to do, but as a trader, as an investor, the hardest thing sometimes to do is to wake up to reality. And maybe that's what I wanted to do more than anything today, is I just wanted to wake you up. Here is reality. Because in order to get somewhere, you truthfully have to know where you are, right? You have to know this is reality today. This is where we are. Because if you think we're over here, but you're really over here, to try to get here, you're going to be, 5 degrees off on a map. Just imagine you're navigating on a map. You think you're here and you're like, okay, we're going to get here. And you're looking at a compass and you start going that direction. But if you're really over here, you're not going to get to your destination. You're going to be way off, right? You're going to have to recalibrate. And so this is reality. The reality is we're going to keep spending. The reality is the deficit is going to go higher. The reality is politicians aren't going to stop. The reality is we're incentivized, and the average American likes taking handouts up front and getting taxed for it over time. And I don't think there's a lot of experts who are saying that this inflation thing is not done, it's not over, and that we'll likely go through a second wave. So if you think, yes, we have tamed inflation, we have not got it down to the ideal 2%. They're even saying that the Feds might settle for 3%. I actually don't believe that. I think they're going to push for 2%. But it's likely that we'll go through a deflationary period and then another wave of inflation, because we're going to have to print to fix stuff, to like get us out of this mess. And so this is what we call the fourth turning. I don't know how many of you guys have done Google searches on this or like look this up, but if you want to write down a term and do some homework after this, look up fourth turning on like YouTube, and there's entire videos that talk about where we are in our you could call it infant to death stage as a currency, as a fiat currency. And what that will do is you'll have you see the patterns that have played out over the centuries in all different worlds, all different countries, and the different fiat currencies, because we have not had a single fiat currency ever last, ever. And there's a certain pattern that happens. And right now we are in the fourth turning, or the end of that cycle with the dollar. And that's why we are de-dollarizing. Now it's not very much. To give you some perception, we used to be 80% of all global exchange. So all global exchange or trade happened with the dollar. It just happened that way. Oil, shipping, like everything. And it's because our military protected the oceans. Like that was our exchange. We'll protect you from pirates and from other countries trying to take your crap. We'll protect the seas in exchange for using the dollar. Well, people are getting off of that. And so now we're at like 78, 79%. So it's like, it's not a huge decline yet, right? We're not hitting like the top of that crevice, that slope. It's pretty slow at first, but it exponentially increases. Just the way that the currency starts at a really fast pace, so does the fall off. And so we're not into that exponential, like where it starts to drop off really quick, but it will be in my lifetime. It will likely be in your lifetime. And so we need to start thinking, how are we going to prepare for this? And is this event something that's going to be life-changing, something that we could actually take advantage of, something that could put me into this top 5 quintile, right? This line here, because now I know how to combat inflation. I'm thinking about this stuff. And so this is my argument for Bitcoin. It's my argument for not fiat currencies, not central bank backed currencies, but currencies or asset classes that don't get affected by inflation. Real estate being one of them, generally speaking, right? We're probably going to go through some deflation. You guys have watched my real estate podcast. We are going through a little bit of deflation in real estate, but generally speaking, over time, it holds up over inflation in any currency. It's its own currency in a way. So let me bring up this thing that's going on with Bitcoin right now. I think this, for those of you who are just catching up on this, this is an article, and there's tons of information on this, but this is an article talking about the ETF that's coming out on Bitcoin. Now, the SEC has been ridiculously rough on the crypto industry right now, right? In fact, they just sent a cease and desist conversation to CoinDesk. I don't know if it was written or if it was spoken over the phone, but anyways, it happened. The CEO talked about it afterwards. But what happened is the SEC called him and said, you need to cease all trading on all your coins and all your tokens except for one, and that's Bitcoin. And it's like, well, come on, guys. Like, I could argue this all day. They just lost their XRP lawsuit. And guess what's listed also on Coinbase, XRP, but they didn't list that one. I mean, they've got their panties in a wad, no question about this. But regardless, there's some good news happening around this, and Bitcoin happens to be kind of the winner, so to speak. And the SEC kind of has their hands tied. They've been put in a position where they've acknowledged that Bitcoin is not a security. And now it's not just BlackRock. Now there are multiple places filing for a Bitcoin ETF. So what does that mean? Well, when I was doing crypto, the way I was actually trading it, and I wonder if I actually have an old chart that shows this. If we have some time at the end, I might go look for it. But I built this chart, an insane chart. I built this chart on Google Sheets. And what it was on it was every single new coin, new token that was released. And then I brought in data through some APIs and some links, all of the markets that you could trade it on. Because if you've ever done anything with crypto, you know this. Like, to buy one coin, you got to go set up an account over here. To get this coin, you got to set up an account over here. To get this, you got to go to Pancake Swap and like make some changes in the exchange. It's not easy to buy a lot of these coins because they're not, they haven't been adopted, is the word. Adoption rate, or the adoption percentage, has a lot to do with how well the coin's doing. I know it sounds crazy, but let me tie the two together. So let's say that you have a coin, and the only place you're able to get it is this thing called Pancake Swap, which is really kind of a nerdy place where you've got to be a pretty sophisticated trader, maybe even somewhat technically savvy. The average American's not going to do this. They're not going to put their dollars in, swap stuff around so they can buy Ethereum to then buy some weird token. Most people aren't going to do that. It's really difficult. It's not easily accessible. And so therefore, the coin in itself doesn't have the exposure to the dollars. Market cap is what causes price to go up or down. The more money in something causes it to go up. When the money's removed, the market comes down. That's why when we went from 3 trillion to 1.7 trillion, most coins have been dropping because people have been pulling their money out of those coins. Well, as market adoption was happening, I had this huge spreadsheet, and I would mark all of the coins that had not had massive adoption, but on news were being talked about all the time, right? So things like SafeMoon, Doge was one of the ones that I got into early on. What were some of the other big ones that were really interesting? Anyways, there was like 5 or 6 coins or tokens that I got focused in on because I knew exchanges were going to adopt them eventually. I knew that because they were popular. They wanted to give their customers what they wanted. And brokers, they make their money in the trade. They want lots of trading. They want the volatility, right? They want the volume coming in. And so when you have this combination, here's what is happening with this ETF. Let's say you've got money at BlackRock, or you have money with your, I don't know, your 401k or your mutual fund or your retirement account. Most of you right now cannot expose any of those dollars to anything in crypto. You just can't. There's no ETF for it. There's no way for your fund to actually move or give you the option to put your money into an account like that. Well, an ETF allows a company like BlackRock to do that, where BlackRock has billions of dollars. In fact, I don't even know, they might be up into the trillions now. But let's just say billions of dollars. Now they have this ETF, this Bitcoin ETF. Let's just say, and I would say conservatively speaking, that like the average client at BlackRock goes, you know what? I know it's risky. Let's say it's really risky, and they don't even know all this data that we've been talking about. And they're like, I'll put 1%, just 1% of all my assets into Bitcoin. Well, that market exposure shovels in all this money into this asset class, and that is what causes a coin to go up. And that's, frankly, guys, that's how most people made their money in the crypto craze. It was market adoption. If you got in early before anyone could get access to it, before anyone could buy it, and then market adoption started happening, the value went up because more people were shoveling their money into it. But how do you do that? It's exposure. It's how easy can you make it for an investor to do it? And so this filing is a big deal. So timing, let's talk timing on this. The SEC really has their hands tied. And this article does a great job talking about this because they've already accepted the fact that Bitcoin is not a security. And so to say no to an EFT, I don't see that happening, but they're going to hold off as long as they think they can on approving this ETF. And so if you're going to get into Bitcoin, timing when to get into it before the ETF happens is crucial, because the moment the ETF happens and this floodgate opens up, it's going to expose a lot more participants to the market. And naturally, guys, 1 + 1 = 2. The price should go up after the ETF filing. It should. I don't see how it wouldn't. You're not going to have 0 people put $0 into this ETF. You're going to have some people diversify and start to put it in. So this has got me excited, one, from a trade perspective, but I'm also a big value believer. Warren Buffett, Charlie Munger, you guys know these names. These are the value investors, and finding value right now is extremely difficult. And what value Bitcoin brings is it doesn't print more of itself. It has a finite amount of how much is out there. Some of it's even being lost, right? So there's less than what's being accounted for. There'll be some of it that never shows up again. And you can't print more of it. It's an asset that is cost a certain amount to mine. So there's value behind how much it costs to get it out. And frankly, at the end of the day, when it's all mined, it's done. There's no more of it to print. You can't do this hidden tax stuff that we've done over the last 100 years. So you really have to be thinking like 5 years, 10 years from now, from a value standpoint, if this works out, if this becomes the the gold standard of the crypto world. I'm not saying there won't be other cryptos that also gain value, like Ethereum. I'm watching Ethereum quite a bit. There might be some other ones that kind of rise to the top as like a fiat or currency exchange, we could call it, but that's not fiat based. That could happen. But this is very likely going to be the gold standard of the crypto industry, and so it's got my attention. So what I want to do is bring up some charts. I promised you guys I would do this, and we're just going to look at. Let's see if I can get this up. This is green chart, by the way. Green chart is what sponsors our market pulse, and I'm going to actually in the future we're going to start doing news, and then I'm going to try to do like 3 technical analysis reviews every week, except for Friday when we do our real estate one, which is the second Friday. But I'm going to try to do this every week, and I'm going to try to do 3. Today, we're just going to do 1 because I love Bitcoin, and I really want you to see what's going on with Bitcoin and how I draw up my technicals. So this is a daily chart. Bitcoin is currently on the drop. You can see today it had a spike this morning, but then kind of went bearish later today, but we're sitting at $25,000 a coin. So $25,000 a coin in Bitcoin. And, you can see we've had some major drops, which for most people is scary, but you don't, in any asset class, you don't want to buy things high. You want to buy things low and then sell when they're high. And so just to give you an idea, I'm going to pull some charts up here. The high of the previous Bitcoin run, let's see if I can get this to zoom in a little bit. But the high of the last Bitcoin run, we had, highs around 68, almost 70,000 a coin. And this was during the peak of the market. And now we're down at 25, so we're about half of that value. But if you go back to its inception, guys, this is 2012, 2008. Anytime even in here, like if you go back to even, by the way, if you do this is really revealing. Just bring us back to here. This was the spike. This was the previous high crypto spike when crypto was having its hype cycle back in 18. A lot of people don't remember that, but crypto had a hype cycle before the last one, and that was during 2018, where Bitcoin hit 19,000, right? And so like this was a crucial moment, you could say, for the industry, but then it dropped clear down to 3,100. And so we had a hype cycle like the one we're in right now, from 19 to 30. And then look what happened after, guys. Like that was this back here, comes down, comes back up, reaches 13, drops again to 38, hits that 38 floor, comes back up, hits 11, drops back down. And then we start getting into like 2000, what is this? 2000. I gotta get my dates right on this, otherwise none of this makes any sense. Yeah, I think this is early 08s. Anyways, my dates might be off on this, guys, just because I'm not going to spend the time going through this. But anyways, we saw the last 2 hype cycles. This was into the last 2 years, the high of 68, and then now we're currently back at 23. So about a 50% decline. And again, you want to be looking for troughs to buy in, you wouldn't have wanted to buy back in the hype cycle. How many of you guys have been listening or hearing things about Bitcoin right now? It's like nobody. But what's happening is a revamping, and a new market cap is about to open up. And then once it happens, it will be too late. You'll wish you'd listened to me. You wish you got in on these lows, because the highs will go higher. And what people are predicting as like where we'll go after 69 could be, it could be astronomical, guys. But let's do a technical analysis. So when I do my technicals, I'm just going to downsize this so I can see all my charts. I'd like to first get my support and resistance lines. And you can clearly see we've got support at about 15. We've got another support level that really builds in around 18. I remember this level. It was a tough one. It was one of those levels that you can't forget, both on the support and the resistance, because I remember back here we had a hard time breaking the 20s. And so it's going to be between 18 and 20 on the support there. But you can see it just loves this level. We could bring it up just a hair. But it's like hits it, hits it, hits it, hits it. And then previously we had a lot of resistance at this price also. So though I like to do the prices above and below where we're currently at. But let's keep going. I've got some resistance there going from the past. We're currently sitting on a strong support level. And then above this, we've got some major levels here. And we can rate these levels also. Yeah, I like that. And then what I'm going to do is show you guys a fib on here. We're going to just take this top to bottom. You'll kind of start to see these levels kind of match up. So I drew a support level here, and that's about the 50% level. And it makes perfect sense. I drew a level here, and you can see this at about the 23.6 level. And then if we took like the low to high here, you'd probably see a bunch of these levels in there also. So I actually don't like using these. Fibonacci is great if you don't know how to draw your own support and resistance. I find drawing your own in give you a more dialed in price point. But here's what's going on. And the rumor is we could have an ETF in the next 6 months. So before the end of the year, even a year. I just don't see how it couldn't happen within the next year. I just don't see it. I don't see how we couldn't have an ETF. Again, none of this is financial advice. You guys have to make your own decisions. But my own opinion is I just don't see how this ETF won't happen in the next year. And so we're sitting at a great price. In fact, I would say there's a bunch of negative news getting pushed out by these partners, you would call them, of people who are trying to buy the asset class, probably BlackRock included, so that when they open the floodgate, they're the winners in the game, no matter what, right? The 5%, they know what they're doing. They understand these concepts. And so they buy in when it's low. They try to suppress the price. And then when the floodgate opens, the concept of market cap kicks in and the price naturally goes up. And so we're sitting at strong support right now. And I would say we'll put a moving average on this here in just a minute. But the resistance we have here isn't that strong. It is definitely going to bounce. So from 24 to 30, or you could say even 25 to 30, this is like a pretty strong range. In fact, you could probably trade this if you're intraday trading. Just look at what's happened. If we were to move this level up just a hair, look what's happened since March. You could have, every time it came to 30, sold. Every time it went to 25, bought. And you would have just been raking in these like scalp trades. I mean, there would have been good trades in both ways. So you could day trade this. If you're trying to just get in short position, again, this is why I'm doing this. Let me show you what a short-term trade would look like. Short-term, if you're looking, and guys, this is months, right? These are daily candles. But if I was looking at a long-term trade just off of technical data, I would be posting based off of technicals. I would be posting a long trade off of the support. I'd be putting my stop loss somewhere below the 25 level. Obviously, you got to let this thing breathe. But it looks like if you're into a stop loss of like 24,262 or 200, you could even call it 24,300. Like this would be a solid stop loss. And then your take profit, an easy take profit, and this is where your fib lines count quite a bit. But you could take the previous high to low and you can go, okay, easy target at 23, which is at 26, your secondary target at 27, 50% targets at 28. And this is, in my opinion, and historically speaking, when you're intraday trading or this is still called day trading, even though you'd be holding this for multiple days, a 50% target is not unrealistic because this is This is like where it would go naturally. And then if it doesn't, it will hit your stop and you're out. What if it goes back up, Matt, to the next line? It goes up to 30. Well, obviously, this is why we play fundamentals. This is why I like watching fundamentals while also doing technical analysis. If the price is at like 30, and I'm like, cool, well, Matt talked about how I could buy or sell this, right? You could short it, and then you put your stop loss at like 32,000. And then again, your target would be like 28 onto the short side. That would be a great trade also. It's not up there yet, but let me give you some caveats. Let me give you some like fundamental news or things I'd be watching that would be a red flag. Like, don't waste your premium. Don't waste your trade or your stop loss on this trade if you get fundamental news that's clearly going the opposite. And let me give you some examples. If it's at 30,000 and there's a news announcement that day that BlackRock's ETF got approved, for example, I would not be looking at a short trade. Like, that would just go against everything that we're talking about. In fact, I would be very bullish in terms of my trades and very hesitant on my bearish, meaning you can do both, but have a bias. A lot of traders really struggle to have a bias, and they're like, oh, well, I'm doing 50% buys, 50% sales. And it's like, no, don't do that. Find either a trend or know the value, the underlying long-term value. Because if you really believe in Bitcoin, owning it as a worst case scenario isn't bad, right? If you really believe in it, owning it and having it in a long-term trade is not a bad thing. So obviously, this is something you would be wanting to buy. Like, this would be a trade you would do like on Zoom or Coinbase or Kraken or, any of those. I'm not making any recommendation, by the way, but any of those crypto exchanges, you could make that trade and at the end of the day, own the underlying asset. And so this may not be a trade that you want to do leveraged. But if you are doing it leveraged, obviously make sure you got tight stop losses. But if you're not doing it leveraged and you're just buying it and then thinking, oh, I'll just sell it at 28 and I'll just keep doing this thing Matt's talking about where I just keep buying in, selling it, getting little pieces as it climbs, that's fine also. But at the end of the day, if you really believe in it and it drops to like 20,000, or I even have a tolerance around 18, I would hold it because you believe in it. You're seeing the evidence fundamentally that is going to play into Bitcoin's favor. And that's all of this spending, all of this debt, the fourth turning in our currency. And it's just reality. Here we are on the map. X marks the spot. Here's where we want to go. And now knowing where we're at and knowing the type of things that could get us where we want to be, this is a very strong alternative to a fiat currency. And by the way, if you don't like this, I'm going to give you one more before we get done. But Bitcoin's great. I just gave you 3 trade options, by the way. I don't know if you guys caught that. Here are my 3 trades. One is a buy trade right now. A buy trade right now. You're in the position for it. A stop loss below this support, so at like 24, and then a take profit somewhere here at the 28 range. You could go higher. And if you like the asset, just hold it. A sell, if you're going to day trade at around, anywhere really where this price is, around 30,000, your stop loss at like 32. And then again, you're taking your take profit at 28. And then my third trade was just to buy the thing, buy it and hold it. This is a long-term play. And I believe that this is something that's going to play out long-term. I just don't see how it's not. But if you don't like Bitcoin and you want something that just long-term has proven to outweigh inflation, I would do gold. And so let's pull up gold. Whoa. Oh, got to get rid of this. Come on. And gold, for whatever reason, people just trust gold more. I don't know what or why. Well, it makes sense. I've got a bunch of gold, so it's not a dumb trade. It's not to me something that's like, I think you're dumb because what you want is gold and you don't want something else. Hold on, guys. Let me refresh the charts here. But gold, you can do the same thing because gold is a natural hedge against inflation. And we've been seeing the price of gold dropping. And whether you're day trading it or whether you're owning it as an asset, I like both. I think both are good options, but gold is not going away in value. You cannot print more of it. There's only, because it's a rare precious metal, it costs so much to pull out of the earth, right? You can't just print our way through things. And for this reason, the value of gold is constantly hedged inflation, constantly. And it's a good asset class just to back up any amount of wealth that you may have. All right, there we go. Here's gold. So gold's trading currently at 19,000. I know that's crazy. I remember buying tons of this when it was 12. Let's just bring up a 1-day chart so you can see it. And then I got to get off. You guys got to get to your day. And then next week, this is what we're going to do a lot more of. I'm going to do 3 of these. We're going to give you 3 trades in every webinar so that you're looking at the markets for potentiality to make profits. Because at the end of the day, if I'm just delivering news and you don't know what to do with it, you don't know what asset to go into based on what's happening fundamentally, I think it's kind of like starting the race but not finishing it, if that makes sense. So anyways, here's gold going way back. You can see over the last year, like it's just been floating into this price range. Oh man, these charts are, there we go. Now we're loading. And we had some really great opportunity to buy after COVID. I remember this really well. Come on, guy. And the prices were back at 16. I don't know if we're ever going to see 16 again. And the only reason is this is dollar denominated, meaning this is an ounce of gold based on the dollar. And we just printed so much money, guys. I don't know how gold could go back down in value because we just have trillions of extra dollars out there. So anyways, let me mark some this one's a little more tricky. Let me mark up some strong support and resistance levels. I'll get you guys a buy and sell. What's really fascinating about this too, by the way, is people are like, oh man, are you in a buy on this? Are you on a sell on this? And it's like, maybe. And it might be the opposite of what you're thinking, and both can be right, both. And so I think it's important to note that you can be in a buy trade and in a sell trade at the same time and be right. It just has to do with timing. It has to do with like, what is your outlook? What's the overall price that you're looking at? So all-time high, almost 2,100 an ounce. And that's spot. That's not by the coin. Obviously, there's like a $200 premium on coins. But right now, we're floating kind of in between this 1876 and 1967. And so I don't know anyone who's on this webinar doesn't have access to trade this. And if you don't, or if you don't, there's obviously there's not a broker out there that doesn't have some form of a way to trade gold. This is XAU USD. This isn't even gold spot that I'm quoting you. This is the Forex version. So if you have a Forex broker, you could be trading this on there. If you have just a TD Ameritrade account, you can just buy spot. There's a bunch of ways you can do this, but the price is going to be the same pretty much everywhere you go. But here's the trade. It's pretty simple. Let me mark out, how do I want to do this? I'm just going to kind of show you. I'm going to visually state it. So if you're going to buy right now, I mean, obviously we're at the 50 line. You're going to be at like 1929. So there's definitely still a buy trade here. But if you were to do it, you'd put your stop at like 1867. Your stop loss would be at like 1924, 25. If you're going to play the support level again, you might move this up a little bit to be a little more relevant to recent days. But you could put a stop loss right at like 2000. You could actually set these trades up, by the way, without even having to wait for it. You could set up a sell trade, at 1972 with a stop loss of 2000. Then when it hits it, it'll just put it in. You could put in a buy trade at like 1839 with a stop loss of 1863. And again, your take profit on both of these is going to be somewhere in the middle. It's going to be 1936. You can put both of these straddles in place. And when it hits it, it puts your trade in. Right now, gold has been very sideways. And I actually don't anticipate that changing near term, but long term, what's the play on gold? what did we just talk about with Bitcoin and all this inflation? Is this price ever going to go back to historical lows? No, there's just no way. Unless we come up with some technology where I can turn water into gold, it's just not going to happen. This is a rare earth mineral. It's hard to mine. Fuel prices are through the roof, which costs it even more to get out of the ground. I don't see the price of this ever going down. And if you look at a long-term daily chart, that's the trend. It always has been going up. It follows inflation. Why? Because as the dollar inflates, there's more dollars to buy gold. There's only so much gold. And so the price naturally has to go up with inflation, or sometimes go even higher than how high inflation is happening. So a lot of this has to do with demand, right? We use gold in a lot of our parts, circuit boards. A lot of this AI stuff requires gold in the parts. These AMD chips, NVIDIA cards that are being printed for AI, there's gold in every single one of them. So this is also a resource we're using inside of technology. So I don't see the price going down. So obviously I'm more bullish than bearish long-term. So if you're like, I want something to hold that I just don't have to deal with inflation, right? I want to wake up 10 years from now and be like, oh, good. I have this store of value that has not lost its value. Like people are calling Bitcoin the coin that will be the big store value, right? The kind of the gold standard of crypto. Well, gold is the gold standard, and long-term, I'm bullish. I don't know anyone who isn't. Is it going to be your best trade? Is it going to give you 12, 30% a year return? No, it's not. But if you own it, if you own the underlying asset and then trade it short term, that's a way you can get premiums on something that you own for the long haul, for the long stay. And as you make profits, take your profits off the table, take half your profits off, always take stuff off the top, and then buy more of the underlying asset that you really believe in. And this webinar, I gave you two, Bitcoin and gold. So there you go, guys. Two very basic technical analyses. Next time I do this, I'm going to do three, and we're going to run a lot of data. I'm going to show you, I probably will go overboard, meaning I'll show you more indicators than you probably want to see. I have some really cool resources I can show you that will give you an idea based on like 31 technical indicators. Are we in a strong buy, or are we in a strong sell based on all of those technical indicators? And then we'll do a quick fundamental review on each of them. And then we'll set you guys up for some trades that you can make throughout the week. But this one seems pretty solid. The Bitcoin one makes what right now from a technical standpoint, I think it actually makes more sense. So Bitcoin is, just coming back to this. Bitcoin technically looks better in terms of getting close to its price, but you don't have to wait. What's going on with this? But you don't have to wait for this price. This line shouldn't be there. You don't have to wait for it to hit your target. But right now, Bitcoin is like sitting on that target. So anyways, there we go, guys. Oh, I'm 5 over. Thanks for being on, guys. Loved doing this with you. We're going to mix it up a little bit more into the future, but have a great weekend. Happy trading, and we'll see you same time, same place next week. Thank you.